All right, let's talk stimulus again. So last week I did a video on the latest stimulus package, aka the American Rescue Plan Act, and I targeted that specifically for business owners, but today I'll be focusing primarily on how the latest stimulus impacts you as an individual. And buckle up, this could be a long one. Keep in mind, this won't cover every detail of every provision in the new stimulus, but the following highlights should give you a broad overview of what happened and how it may impact you. So number one, bigger stimulus checks. This is the one that most people care about as it will impact the majority of the population. And since most people have probably already received their checks at this point, you probably already know how much you were entitled to, but here's a quick rundown anyway. This round of checks was more generous than previous stimulus packages at $1,400 per person, including dependents, not just children under age 17. However, the income limits for who can receive those checks have been narrowed this time. Here are the AGI ranges for those checks. You can find your AGI, which stands for Adjusted Gross Income, on line 8B of your 2019 tax return or line 11 of your 2020 tax return. So if you're under the lower limit, you will receive the full amount. If you're in between that range, you will receive a partial stimulus check. And if you're over the upper limit, you won't receive anything. Number two, there were enhancements to the child tax credit. So having kids may just pay some additional dividends this year. Historically, the child tax credit was $2,000 per qualifying child. Now for 2021 only, this has been temporarily increased to $3,000 per qualifying child 17 and under, and $3,600 per qualifying child under the age of 6. However, similar to the stimulus, there are also income limits to this big credit. For each $1,000 that you exceed that AGI limit, the child tax credit reduces by $50. For that additional amount over $2,000 at least. The normal rules and income limits still apply for that first $2,000. Another nice feature around the child tax credit increase is that it is fully refundable, meaning the credit can come to you in the form of a refund if the credit makes your tax liability negative. Not all credits are refundable like this. In fact, many are non-refundable, meaning you can only take the credit up to the amount of tax that you would owe and cannot get a refund if the credit is in excess of that. That is not the case here. It's fully refundable. Another very interesting aspect of this credit is that 50% of it may be paid in advance. So this stimulus directs the IRS to pay out 50% of the estimated child tax credit in equal installments between July 1st and December 31st. So you may be thinking this is similar to another stimulus check, but this is different because if the advance payments end up being more than the actual entitled credit upon filing your 2021 tax return, you may have to pay that extra amount back. This is referred to as a clawback provision. Number three, upgrades to the child and dependent care tax credit. So along with the child tax credit, the child and dependent care tax credit is also getting a boost for 2021 at least, to further help parents and caretakers. So this is a credit available for those that paid expenses for the care of a qualifying individual, such as a child or elderly parent. And the credit is typically calculated by taking your care expenses, so the expenses that you paid to care for that person, times a percentage, and then multiplying those two gets you your actual credit amount. Well, under the American Rescue Plan Act, the maximum expenses that you can use in that credit calculation are going up from $3,000 to $8,000 for one child, or from $6,000 to $16,000 for two children. So huge increase there. On top of that, the maximum percentage you use in that calculation is moving from 35% to 50%. So these two things in combination increase the maximum potential credit for an individual with one child from $1,050 to $4,000. For those with two children, the maximum potential credit increases from $2,100 to $8,000. Now, of course, there is an income limit with this one, but that is also being increased drastically as well. So before 2021, those under $15,000 in AGI would get the full 35%. And then that would gradually decrease to 20% until the taxpayer's AGI hit $43,000. Well, for 2021 only, that phase-out limit is drastically increasing. So it'll range from $125,000 to $185,000 in AGI, meaning those under $125,000 in AGI would get 50% and gradually decrease to 35% as AGI approaches $185,000. There's also a new second phase out from $400,000 to $440,000, where those over $440,000 in AGI won't receive any credit at all, where they did historically. Finally, unlike in prior years, this credit is fully refundable for 2021, meaning you can get a refund for any amount that the credit exceeds your tax liability. Number 4, extending unemployment compensation. So with millions of individuals still unemployed due to the pandemic, happy 1-year anniversary, by the way, the stimulus extended federal subsidies to states for unemployment to September 6th, 2021. And that federal subsidy is being kept at $300 per individual per month on top of the state unemployment. Also extended to September 6th of 2021 was the Pandemic Unemployment Assistance Program, which allows self-employed individuals to receive unemployed compensation as well. Also an interesting addition here, if you received unemployment in 2020 and have AGI under $150,000, up to $10,200 of it will be considered tax-free income. And that amount is per individual. So for joint filers, that amount is $20,400. Number 5, COBRA subsidies. So generally, when an employee is laid off, they have the option to keep their health insurance plan for 90 days after termination via COBRA. However, the entire premium cost, which is usually largely covered by the employer, must be covered by the terminated employee. And this can be very expensive and not really ideal when you're out of a job. Fortunately, the stimulus made some changes to this for 2021. So for those individuals who have been involuntarily terminated, they can utilize COBRA to keep their health insurance through September of 2021 for free. Like I said, usually an individual bears the full cost of the insurance premiums and can only keep it for 90 days. So having the option to keep the insurance at no cost through September is a huge benefit to those who lost their job during the pandemic. Number 6, changes to the premium assistance tax credit. So when it comes to purchasing health insurance through a state-run exchange, individuals are required to spend a certain amount on monthly premiums before the premium assistance tax credit kicks in to cover the rest. And that amount that they have to pay first before this credit kicks in is based on household income as a percentage of the poverty line. Well, for 2021 and 2022, the stimulus reduced this amount so that people can spend less on insurance while still maintaining the same coverage. Finally, number 7, student debt. So while the stimulus did not forgive any student loans, they did include a provision that excludes discharged or forgiven student loans from taxable income between 2021 and 2025. So this was a concern that a lot of people had when talks of student loan forgiveness was first presented. Usually when debt is forgiven or discharged, it's considered taxable income to the taxpayer who had that debt forgiven. This can pose a real problem if a big chunk of debt is forgiven and then the taxpayer can't foot the associated tax bill. Well, this provision around student loans sort of resolves that fear and teases the idea of potential loan forgiveness in the near future. Also interesting, this applies to forgiveness of federal student loans and private student loans. So if for some reason your private student loans are forgiven, you won't have to pay taxes on that either. Well, I know I just went through a lot, and believe it or not, that was a very high-level overview. If you're interested in digging into more details around this stimulus, like I said, Kitsis.com has an incredible write-up that does a much better job at explaining all this than I did, although it is pretty technical because it's kind of geared towards advisors, but it's there if you want to read it. Well, I hope this was informative and helpful. Have a great week.